I mean, this is ridiculous, right? Like the IRS got $80 billion, and now they're saying we're not going to be able to upgrade this thing for another 7 years. At the end, it's unlikely they'll actually make it. I wouldn't try to fix the IRS anymore. Like the IRS as it is, I think it's kind of like too much technical debt, to use the tech word, to save it. I mean, this system is just too old. You can't upgrade it. You have to rip out and put in new. But the problem is, how do you do that? You can't just stop the IRS for a while.
Coming to you weekly from the OnPay recording studio, this is the Cloud Accounting Podcast.
Hello and welcome to the Cloud Accounting Podcast. I'm Blake Oliver.
And I'm David Leary. Blake, we
Hey,
just
David.
spent the last 2 days together, and now
Yeah, we did.
recording
We
virtual.
were at the CPA Educators Conference, which was very convenient. It was in Tempe. So right near me, only 30 minutes from me, a couple hours from you. What did you think?
Well, for us, like if we think about our journey here, right, we fell into CPE education backwards, right, because of the Cloud Accounting Podcast. And so everything, I feel like I'm just learning from people that have been doing CPE education for years. And it's a mix of like vendors and companies that offer CPE like Earmark. And then there's the state societies. And it's the people in charge of creating the CPE content or offering CPE to their state members. And my biggest takeaway, and this is like going back to like Accounting 101, and like there's these standards boards like FASB and well, we have NASBA, and there's some states that don't actually use NASBA. They don't participate. And I didn't know there was a fractioning. I had no clue that this went on. I thought it was like, well, they're the national, like everybody uses that one. And I was like Louisiana, for example. They have to prove all they don't use the NASBA standards, which is interesting. Mm-hmm. So that was like a big learning, is just
how even though we have NASBA, so much of CPE is still fractured, and it's different in every state, is what you're saying.
Yeah, and they all have their own reasons why they don't want to participate or use them, and it's I just didn't know it was like that. That was like my big learning. Yeah. And I think the second big learning for me was the opening keynote. Hayden, was his last name Williams? He's the CEO or president of the Washington State Society. And he does the opening keynote. And coincidentally, he actually was at ASU and got kicked out. He failed out of school the first time. But he goes on to say how he basically had 12 years of school to get his degree, right? Had a horrible GPA. But he never actually finished the rest of the story, which the way I heard it was, and nobody cares because you took the CPA exam and you have those 3 letters. Nobody cares that you had a crappy GPA. Nobody cares that it took you 12 years of school. And you went to 3 or 4 different campuses. Like you got the letters. And you could so you could have crappy education, or whatever, an average education, below average, crappy grades, and you still can be the president of your state society of CPAs. Because you have those 3 letters, and it goes to I was like, that just reinforces the point. Like you just need the letters, the exam basically.
Yeah. So for me, I was a little confused about this conference because it was called the CPA Educators Conference, and I thought we were going to go there and meet educators, and there were some CPE creators, some instructors there.
Yeah.
But I would say 95% of the room was people from state societies who are in charge of CP for their members, and then vendors like Surgent and ACPEN and these other companies that work with instructors to create CP. But there were actually very few instructors there, and there were very few CPAs even in the room. I was one of the few CPAs because a lot of these people are like professional educators, and they're lovely people and everything like that. But I just think it's strange that like the CPA, the profession has gotten like so far away from teaching itself, right? We have professional educators, we have all these people that create CPE but aren't practitioners. And I think one of the things that we want to do at Earmark and that we're working to do, and I do on the Earmark podcast, is actually bring in real practitioners to teach because they're actually doing the work, right? Yeah. And they know what people need to know. And unfortunately, a lot of times you get these educators who haven't done the work in like 10, 20 years or longer, and they're telling us what we need to do. So like that's a problem that I see, especially in higher education, where you've got people who the last time they ever did a reconciliation was 20 years ago or more, and here they are teaching accounting, and they're still teaching it the old way. So that's what we need to
I do feel
fix.
like they were all there, though. There's a lot of discussions on how to deliver CPE in different ways going forward in the future, because they all will admit when you're talking to them, they're all having declining memberships in general. People are not the age of the people doing different types of CPE is, I think the lowest was like webinars. The average age is 48, but all the other like in-person seminars, all these other ones are all above the age of 50, the average age.
Mm-hmm.
And they know they're not getting anybody under the age of like 40 getting CPE through their programs.
Yeah.
And it's a dilemma for them. But the way they kind of presented it, and I think this was CPA Crossings, their new CEO, and I think they got purchased by Pennsylvania State Society, right? CPA Crossings did, right? Mm-hmm. And he was kind of talking about you have to start breaking your content. And long story short, it's almost like in my opinion, it's like a Netflix model, right? It's convenient, there's high quality, and it's cheap. And then I step back, I'm like, that's what we're doing with Earmark. So it's kind of good.
Yeah.
We're kind of helping to lead that conversation a little bit. We don't have all the answers though. I mean, they're trying to reinvent themselves, all these state societies, and what offerings and how they're going to do it.
Well, and every time I ended up talking to somebody at the society, I said, okay, how's your membership trending? Is it going up? Is it going down? And most of the time it's going down, or they would say it was plateaued. And then I asked, well, does your leadership have any plans or any strategy for fixing this, for increasing your membership or making sure it doesn't fall off a cliff when 75% of CPAs retire in 10 years? And the answer was no. They weren't aware of it anyway, which makes me think there isn't a plan, right? Which is the really concerning thing for me as a CPA.
The vibe I got to was 150 hours has to go. I was getting that vibe from a lot of people, including the opening keynote, the president of Washington.
Taylor is in the chat and said, I know when I go to different conferences for accounting professionals, I'm the youngest by far in the room. Yeah. And, I'm almost 40, and I feel like a lot of times I'm the youngest in the room. So,
well, the two accountants that came to do the talk to present how younger people are feeling about the profession, right? And how they like to learn and things like that. By the time they were doing their talk, I went to go try to talk to them. They already bailed. They had to go back to work. They were gone. They came in, did their presentation for an hour, and they bounced out. I was like, I didn't even get the chance to talk to them. They're gone.
Yeah.
But
they weren't
working
even
in the profession. They're accountants.
They were, and they were brought in to talk about what young professionals want. But they themselves were like already 10, 15 years into the profession. Like the people that actually need to be there talking about what young accountants want aren't there. They're all working, 60 to 80 hours. That's the problem, right? But I want to get off of this topic because we got some feedback from a listener that they're sick of us talking about the 150-hour rule. I don't know if you saw that email, David, but one of our listeners said, it's something like, Jesus, you guys need to stop talking about the 150-hour rule. I'm sick of it.
But we cover the news and everybody's talking about it. How could we not talk about it?
How could we not, right?
Talking about it.
But in Accounting Today just did a whole series about it this week. They had like 3-4 articles that came out like today and yesterday. So
going concerns, publishing people's tweet threads. It's not going away. So
unfortunately, I can't promise you that we won't talk about it on this episode because we got an interview with the executive director of the State Board of Accountancy in Arkansas, Jimmy Corley. He came on our program. We did the interview earlier this week. I put it on LinkedIn, and I'm going to play the clip of it for you on this show, but I'm going to wait to do it so I don't annoy the folks who are tired of the 150-hour rule.
But it's not us talking about it. This is like a real person. And just to clarify, is Jimmy the director of the society or director of the state board?
State board. Executive director of the state board.
State board.
So it's great. He talks about his opinions on the 150-hour requirement, how we can attract more people into the profession. It gave me a lot of hope, actually, that there's guys like Jimmy running state boards. So we'll talk about that. Hey, JG Tax Pro in the chat. Thanks for joining us. He says, I've often said that the only value proposition the CPA title has is brand recognition. I have a Mac and my undergrad was in nuclear engineering technology. I still struggle to find time to study. Yeah. The brand recognition is what is the value for most CPAs. 85% of CPAs don't actually need their CPA to do what they do. It's only the 15% of auditors who need it. So the rest of us, we're getting it and we're keeping it for the brand. And so that's what I'm really concerned about, is how do we keep the brand relevant?
Especially all those investment guys and insurance sales guys that are, they're still CPAs, but they don't do any accounting work whatsoever. But they keep that brand because it helps them sell more insurance and it helps them.
I know. Well, and I need to be putting CPA after the end of my name on this stream that we're doing here if I'm going to really represent. Anyway, let's talk about the news, David, because there has been a lot of news in the accounting profession. And the big story of the week, I think, has got to be that China is telling firms that do work with the state or are state-owned to drop their Big Four auditors. And the reason they're doing this, they say, is because they are concerned that the Big Four accounting firms may be sharing data from these Chinese firms with American and European governments.
Because if anybody would be an expert in those behaviors, it would be China.
Right, exactly, right? But, I mean, hey, it's not hard to believe that this could be happening. But this actually goes back to, I don't know if you remember the beef that the PCAOB and the SEC were having with Chinese firms and getting access to audit papers.
Yes.
Yeah, Chinese companies weren't giving access to the regulators to investigate the audit papers to make sure these audits are being done right. PCAOB
and they were threatening to delist them, right? Because
exactly. Threatening to delist. And then there was a story, I think this happened this past summer or something, where the PCAOB won. They were victorious. The Chinese firms said, we're going to give you access. The audit papers are opened up.
I remember.
They went over there. And so it seemed like a victory. But really, I think what happened is the government said, we're going to get back at them, right? And so now this is the way they're going to do it. They're basically going to take away this business from the Big Four, and that way there's no regulation. The access isn't going to happen. More and more firms are going to get delisted, and it's like a multi-billion-dollar thing for these firms. Let me find the number here. Yeah, it is. The Big Four earned a combined revenue of 20.6 billion yuan. That's $3 billion from all Chinese clients in 2021, according to the finance ministry in China. So this is like another example, or it's an example in the accounting profession of how the U.S. and China are growing further and further apart. And the same way that we have almost two different internets, and we have different companies providing social media access, and this is going to be a big deal if this ends up happening in the business world. Because think about it, if you're an investor in the U.S., are you going to trust audits that weren't done by Big Four auditors, that were done by Chinese audit firms, right? That are not global, and that might feel pressure, even more pressure than the firms feel now, to deliver the audit results that these companies want.
I think for me the takeaway here is that's just going to free up capacity, for the firms. There's that many accountants now that can do other work, right? They should give a lot of free capacity. But I think, just going back to China, I heard on another podcast this week, the question was kind of posed if China has all this AI and they're so far ahead of us, why didn't they invent Chat GPT? And they're saying ultimately it's because to build something like that, you have to have access to data that's freely available. And the internet and the data is so suppressed there that's why it wasn't built. So you're right. This feels like a political move too. I'm surprised no Congress people penned a letter about this banning of these the Big Four. Where's Congress hammering the hammer on this right now?
So what was top of mind for you this week, David? Because I actually have a Chat GPT thing we could do right now if you want.
Man, there's been so much. I'm trying to digest what's next. Intuit had their earnings, which was all the good stuff's in the conference call. The big thing I think from the Intuit earnings was that desktop ecosystem revenue grew by 10% year over year to $506 million. But I think it's deceiving because they raised the prices up, and basically they have everybody on a subscription now for desktop. Mm-hmm. So even if desktop declined, the total users, which they don't report that, the revenue still could have grown 10%. So it's a little deceiving because I think, the team desktop people are like, look at this. It keeps growing. But I don't think it may not actually be growing. This is just the revenue that grew. And then in the conference call, there was a couple interesting phrasings that was used. And let's see here. Yeah, so they definitely talked about the opportunity for B2B payments in the U.S., and they're bringing bill pay functionality to QuickBooks. So it's both sides. There's the invoice network, right, for mailing invoices around between businesses and sending them from QuickBooks to QuickBooks. And now they're going to add on the bill pay because they really want to attack that 75% of all business transactions are still paper checks. So they want to go after that paper check market and then bring that and digitize that. But then I didn't know they did this. So they integrated MailChimp into QuickBooks Online already. So essentially...
Really? How so? How does that work?
And the verbiage is interesting. So this is the quote. Now turning to MailChimp. We're well on our way to becoming the source of truth for our customers to help them grow and run their business. And it's funny how, because that sentence used to be kind of the sentence for QuickBooks. And now it's being in this context of MailChimp, but it's because it's tied together. So essentially, they've launched a real-time data sync that brings QBO data such as invoices, sales receipts, items, customers, and addresses into the email channel now. So you could create an email and be like, anybody who ever bought this item, send that email, essentially. So they're really tying that in together. And then the other one that was interesting, they kind of got into like some of the macro of businesses in general. Mm-hmm. But one of the things, he said it twice, Hassan said it, one of their goals is they wanted the success rate of small businesses on our platform, so it would be, QuickBooks and MailChimp, the Intuit stack, to be 10 points better than the industry. And apparently it's more, the result's been more than 15 points better than anybody in the industry. But nobody really got into like, what does that mean? Does that mean like if small businesses 10% more are more successful on, or 15% more successful with these QuickBooks products? Nobody got into what that real number is, but he said it again deeper in the thing. So I don't know what that means. Like if I'm a business and I use Intuit products, I'm going to be more successful, and it's better than everybody else, 15% better than the rest of the industry, like other products. Mm-hmm. Nobody asked. So it's not a very clear line on that. And what's the last one little thing? Oh, they think they're going to still see the subscription flip for QuickBooks Desktop run for another 1.5 years. Like the revenue should keep growing as they keep flipping people to this subscription model on that. And they're seeing lots and lots of people return to use TurboTax Live last year, returning again to use it again, of course. They have 100 million consumers on the platform, and so they can see people's credit scores and credit card balances now. And people's credit scores are down about 13 points, and credit card balances are up 20%. And the big impact on this, it's the people that are like the 600 to 660 credit score range are running with 9,000 credit card debt right now. So from an economic perspective, that's a little scary.
Right. Well, actually, I would say that's good news. From an economic macro perspective, it's not good for the people who have the debt. Like credit card debt is terrible. But from a macro perspective, we need people to rack up the credit card debt so that they rein in their spending, right? If they have the credit card debt available, they'll use it. And that's what's driving up inflation, right? So we actually want people to max out. What we really want is for them to control themselves and not spend what they don't have. But if they're going to be an American consumer, which they are, then they're going to spend what they don't have. And so we need them to hit that limit so that they stop and that prices can moderate, right? Even if they don't come down, we that's consumer spending is what's driving inflation. Sure. So, David, you brought up, those are great insights from the earnings report. Thanks, David. You brought up Chat GPT, so I wanted to do an example of Chat GPT in an accounting firm. So this is from Paul Medina. He just tweeted this today. He said, daughter of client emails, quote, I owe $700 on TurboTax. How is this possible? I haven't done this daughter's return in 5 years. How would you answer? Both polite and humorous answers welcome, but would like at least one polite answer. And I thought, hey, this is perfect for Chat GPT to answer, right? Like it's good at writing strange emails. It's good at
especially since she is not a client.
Yeah.
She's a non-playing client, so you don't want to actually invest in the real an answer.
Exactly.
yourself.
You don't want to invest time in responding, right?
Okay.
So I asked Chat GPT, I said, I put in exactly that tweet and I put it into Chat GPT. So here's the polite response. Dear client's daughter, thank you for reaching out about the $700 owed on your TurboTax account. As I haven't had the opportunity to review your tax returns for the past 5 years, it's difficult for me to say why this amount is owed. I recommend reviewing your tax returns and payments from previous years to determine if there are any outstanding balances or penalties that may have contributed to the current amount owed. If you'd like, I'm happy to assist you in reviewing your previous tax returns to help identify any issues that may need to be addressed. Please let me know if you have any further questions or concerns.
Ooh, that's a dangerous sentence to put in.
Humorous response. I'm sorry to hear that you owe $700 on your TurboTax account. My initial guess is that perhaps you've been spending too much on avocado toast, but I could be wrong. In all seriousness, without reviewing your tax returns for the past 5 years, it's difficult to say why this amount is owed. I suggest taking a closer look at your tax returns and payments from previous years to determine if there are any outstanding balances or penalties that may have contributed to the current amount owed. If you'd like, I'm happy to assist you in reviewing your previous tax returns to help identify any issues that may need to be addressed. Let me know if you need any help spreading the word about the dangers of avocado toast addiction. So there you have it. It's a great usage of Chat GPT.
But if you step back and like think about that answer that was given in both of those, right? It's very like, oh, you owed, like, it's this like weird gray non-answer, like, well, you probably owed and you didn't make enough payments, when really the answer is probably like, oh, go look at your pay stubs. You probably didn't have enough federal withholding taken out. Like, it's not the answer, right? It's just, it's so wishy-washy, and I think that's the problem. I think with this, it's not a real answer.
Yeah, but
the
you
framing
have to send
of it,
an
if
email.
you go and change the one or two sentences, the letter's written
it's
for
good.
you.
Yeah, it's pretty good, right? I mean, it gives you something.
Yeah.
Thank you, John, Alistair, Joseph, Julie, for joining us. Joseph said, Chat GPT is so cool. I'm going to use it for email responses, LOL. It's something you can totally do. I've been testing out the Zapier integration with it. You have to go set up an OpenAI account and put a credit card on there and link it up, and it takes like half an hour to do it. But you could actually like put emails into a folder and then ask Chat GPT like through the Zapier integration, have it automatically draft responses to those emails. So if you've got a certain type of email inquiry you get and you want it to just like draft you something that you can
emails from Blake.
Yeah,
have auto reply to, and it'll just be it'll be in context, kind of.
Mm-hmm. Yeah. So Chat GPT for the win there.
Did you see the Chat GPT for the loss that happened this week?
What's that?
So we got this in from a listener, Callie Maxson, Maxson. Apparently, the Vanderbilt University, their staff, well, there was a shooting. I don't know if you saw it at Michigan State last week or whatever.
Yeah.
They used Chat GPT to write a sympathy letter, text, to respond to the shooting. And it basically, then they had to write a real email and apologize for doing that.
Yeah.
So, again, I think there's like, when should you use it, when should you not use it properly?
I feel like actually that's a great use case for it. Is like I wouldn't know what to say in that case. Like if one of my employees had like a death in the family, I'm going to sit there trying to figure out how to write something that's empathetic and nice, for a long time. And ChatGPT could really help me. So I don't understand why everybody's so down on this. I guess it's because it feels impersonal that they did that.
Well, it also it went on to say like creating a safe and inclusive environment for all. Like it kind of, I think, pushed some people's political slant buttons possibly as well, right? It feels like, oh, is this AI weighted one way or the other? Now, maybe it's because it didn't say thoughts and prayers, which usually is what happens in these situations. So,
it's tax season, David. So shall we talk about tax? Should we talk about the IRS? I think we mentioned that they gave up on their plan to modernize their ancient technology. Remember that? They had like a plan to get rid of the, what is it called? The master file system, or to upgrade that thing. And I guess they never got around to it.
Well, they had to shift resources to other parts of the IRS. They don't have time. Yeah. They don't have the resources to work on it.
Yeah. Well, Washington Post wrote an opinion piece. The editorial board wrote a piece. The IRS should not be running on 60-year-old technology. I mean, I think we can all agree with that. They're really not going out on a limb too far there. But they include some details that really everybody should know.
And who is the author on that article?
This is the editorial board of the Washington Post.
Oh, it's just the board itself. It's not even an individual per se. Got it.
Yeah, the editorial board, like when the Wall Street Journal does an editorial piece, right? Or the New York Times does it. Yeah. So that's what this is. So they mentioned, of course, that the IRS only answered 13% of phone calls last year. It has a paper backlog that includes millions of unprocessed returns. And the thing that always gets me is, when they dig into like what is actually the technology issue that is happening here. And it's this individual master file that's been around since 1970 when Richard M. Nixon was president and the Chevrolet Chevelle was a hot car. I don't even know if that's how you say it because I'm not a car guy. They are both long gone, but the individual master file is still the main database to collect and store taxpayer information. It was built with antiquated programming languages COBOL and assembly. The IRS says it finally updated some code last year, but COBOL remains in use. And this is the big problem. This is why the IRS can't put everything online, because they've got this system that uses COBOL. And I don't think there's an API for the individual master file.
Well, you think there's an accountant shortage. There's really a shortage of engineers that can write in COBOL. That's the real big shortage.
So they pushed out the project now to 2030, but the GAO warns it's unlikely the IRS will meet that deadline. So, I mean, this is ridiculous, right? Like the IRS got $80 billion, and now they're saying we're not going to be able to upgrade this thing for another 7 years at the end. It's unlikely they'll actually make it. So what I think that they might want to do is do what FreshBooks did. It's like if I had, I'm going to put on my hat, right? If I was in charge of the $80 billion, which I would gladly do, I wouldn't try to fix the IRS anymore. Like the IRS as it is, I think it's kind of like too much technical debt, to use the tech word, to save it. And this system is just too old. You can't upgrade it. You have to rip out and put in new. But the problem is, how do you do that? You can't just stop the IRS for a while. So what if we did what FreshBooks did? And I love telling this story about FreshBooks. I think I've told it to you, David, on the show.
You said it on the podcast
before.
A week ago or 2 weeks ago. Yeah.
Yeah. So what they did is instead they were trying to modernize the product, which had been around for 20 years, and they were having trouble doing it. And so what the CEO did, I think it's Mike McDermott, did is he started a new company in secret, and he took some of his best people and he put them into this new startup, and he gave them the mission of building FreshBooks 2.0, but under a different name. So the idea is it would have all the same features as FreshBooks, but with brand new tech, brand new backend, all that stuff from scratch, the way it should have been built if it was built today, but call it something else. Build it. They basically created their own competitor. And then once they'd gotten it to the point, and it had customers too, right? And once they got it to the point where it could stand alone, they ported over people from FreshBooks 1 to FreshBooks 2. And why couldn't the IRS do this? You could start with like the simplest taxpayers and let them opt in to a new form of the IRS, call it New IRS or New RS or IRS 2.0, and then gradually increase the complexity of the forms that this new group could handle, and it could run in parallel, to the IRS. And I know there's complexities to that, but I think that would actually be the way to do it, is to actually not try to fix the current IRS, but to build a new one.
But that's not how governments work, though. Like, this thing's gonna get milked for 25 years, and they're gonna get the Big Four advisors involved. They're gonna help in this project. The Big Four is gonna get billions out of it. It's tricky.
Maybe ask Chat GPT how the IRS should solve the COBOL problem. That's what D. Hall said. All right, David, what's next?
I think kind of staying in this theme. So there was an article. This was in the Open Secrets News. It's really investigative journalism. But they had an article about Intuit's lobbying efforts and the money Intuit spent. And basically, Intuit has now, in 2022, they spent $3.5 million on federal lobbying. And it's the most they've ever spent, so it's gotten the highest. But if their increase really only feels very inflationary, it doesn't feel like it's a big, huge jump. But they did claim that it was twice as much as what H&R Block spent.
Yeah.
But H&R Block's spending on lobbying is down from their high of what was it? their high in 2018 of 4.1 million. So like they're all lobbying. And then the other piece of this article, which I didn't know, so when they passed the Inflation Reduction Act, do you know that there was $15 million set aside for the Treasury to give the IRS to create a free federal tax filing service?
Yeah.
So that's also like $15 million. Somebody's going to do a special project, research it. It's a good contract if you could get that one too. But that's something that probably will never roll out.
IRS should absolutely create an easy way for it should create its own free file for sure for like just simple W-2s and all that. Why not? I mean,
and to be honest, like if I was Intuit and H&R Block and the AICPA, everybody should be lobbying for them to try to go make this on their own. Because like healthcare.gov, like it's just going to be a complete mess, and it's just going to make everybody else seem more valuable.
Yeah, well, I mean, okay, great. Yeah.
Go build it.
Yeah, go build it. And so then TurboTax and H&R Block would have to do a better job than whatever the free government solution is. It's like, I always feel like there really should be, you have the free government option. So sort of like we have this with healthcare now, right? You have the free government option. Yep. And you have the private options, right? And that way, there's always like a free option. But the way the system's set up now is just so ridiculous. I mean, the only way to do it for free is to fill out the forms by hand and mail them in, right? Like that's absurd.
Which cost the IRS even more.
Yeah.
Probably.
Got a comment from Nathan here. I actually went and looked at a job working for the IRS. As a CPA, you can start at around $55K a year, and the certification is not taken into account. Yeah, they don't pay that great, do they? Although $55K is not bad for a government job where you're probably not going to work more than, 35 hours a week. So when you actually compare it to like what you make as a auditor working 60 hours a week, probably better in that part. JG Tax Pro says, I was part of a 12-year SAP pilot when it was finally scrapped and we were forced to implement a government-made information system, which is still being used and constantly upgraded. Heather says a beta version of the IRS would be awesome. Yes, let's build it. Let's build a private IRS, right? I always talk about this. Like Arizona, we have like a semi-privatized DMV. David, you've experienced this? Yeah. And so it works really well because you can be a private business and you can get a license from Arizona to link into the DMV systems, and you can like process all this stuff on behalf of people. Like maybe that's what the future of accounting firms could be, is actually like having a way to be like semi-governmental even. I don't know. Just a crazy idea. JG Tax Pro says they already have that. I think this is in regards to the free tax prep program. It's called the VITA, Volunteer Income Tax Assistance Program. The current contract holder is TaxSlayer for the tax software. I got it. So, okay. So they're just they don't have their own. They just have a contract with TaxSlayer. Trinity says Intuit or H&R Block should build it and sell it to the IRS. That's the only way it would ever happen. Yeah. What else, David?
I don't want to touch on the accountant shortage too much, but there's an article that caught my headline because it said how CPA firms are engaging the next tax and accounting pros. And then I read the whole article, and it was very slanted because the author, his name is Greg Sloan. He's a CFP, CEPA, a CPMTM. He's the Chief Purpose Officer and co-founder of Go Beyond, a talent development company. So it looks like it's a people company per se. But he calls out in this article the big four, and all of them have these like big purpose statements that he references in here. And not only that, so Deloitte, they have their purpose. Our purpose is to make impact that matters by creating trust and confidence in a more equitable society. And they, in March of 2021, they named their first ever Chief Purpose Officer. But all of them, all PwC, EY, KPMG, they all have like these big purpose statements. And I think they're trying to use that because you've said this, like younger people want to have a sense of purpose at these companies. But like this, having the statement, I don't know if that makes...
Well,
is that the marketing? Is that the marketing of this? Yeah.
That's a lot of marketing money. And if you just have a purpose statement, but you don't actually live up to that purpose, then people see through that. The younger generation totally sees through that. And social media makes it obvious that the company's not living up to those values. And that's the problem that accounting has, is that a lot of these big firms like have a really crappy true purpose, which is just to make a lot of money and enrich the partners, right? Like that's the purpose. of them. If you actually look at how they operate, it's to make money for the audit partners. And, the people who rise to the top of those organizations are not great people in a lot of cases. And I'm sure there are many great people who are partners at Big Four, but I'm sure there's a lot that are pretty terrible, because why would the employee experience be that bad if they weren't, right? It's funny, they're not on social media. It's like they don't exist. I mean, think about it. You got Tony Nitty, who he wasn't Big Four until he joined EY, right? He came up to EY because he was such an influencer.
Yeah.
But who are the Big Four partners representing the big firms on social media?
Oh, yeah.
Right?
Because you think there'd be people for the size of these firms, you would know people that are thought leaders, or they're the brand, because brands need people, right?
Yeah.
Evangelists for that brand.
Right. I think that's the problem. Is Deloitte is just this amorphous brand that doesn't who are the people running it?
Who are the people? That could be the episode title.
Who are the people? All right.
What else do you got?
Well, we should play that interview with Jimmy Corley.
Oh yes, that ties in well.
Okay. I'm going to try and play the interview that we did with Jimmy Corley, the executive director of the Arkansas State Board of Accountancy, talking about the 150-hour rule. So trigger warning, if you are triggered by our coverage of the 150-hour rule, you might want to turn off this stream right now for the next 11 minutes. Welcome to the Cloud Accounting Podcast.
Thank you, guys. Good to be here today.
We've been talking recently about the 150-hour rule, the 5th year of education that is required in virtually all jurisdictions where CPAs are licensed. What do you think about the 150-hour rule?
Well, I think we need to take a hard look at it. Back in the 80s and 90s, our state adopted it, I think, in 98. So we've had it for 25 years. And times were different, and they made a decision, and everybody, bought in. It took a long time to get that for all the states, because I think Florida started in 83 or 84. So it's been a while. Things were different. I wish if I could go back in time and change it, I would have made those hours be specific, and maybe a master's degree, maybe an MBA or a MAC. But I don't know the history. Maybe that wasn't politically feasible to go to that bar. But for whatever reason, we've got this extra 30. And me personally, I've got a bachelor's degree with 152 hours. And my extra hours I got a minor in philosophy, basically, at UCA. I was in the honors college there. And so my extra hours were filled a lot with, Plato and Socrates and John Paul Sartre, and, things that were somewhat interesting for a college kid at the time, but don't have much bearing on my career now.
That's funny. One of my classes that I took to satisfy my 150-hour requirement was Intro to Philosophy. I consider that to be very valuable, but I do wonder, what does it have to do with being a CPA, right? What value did it add? Because it could be in anything. It could have been basket weaving. It could have been. I think we had one listener said that they earned their credits in interpretive dance.
We see a lot of that when we review transcripts for licensure. You'll have some non-traditional students that got a degree in biology or communications, or just runs the gamut, and they'll have a lot of hours that have nothing to do with not only accounting but not even business. And so I think that was the big mistake that we made back in the day. Again, I don't know why we didn't require certain hours or certain degrees, but
has anybody ever published that? Hey, here's all the licensures we issued last year in 2022, and of these, here's how many were accounting degrees, how many were non-accounting degrees, here's what people did for their extra 30. Any stats that publicly you could release?
Oh boy, we could do something like that for our state. It's not readily available. We'd have to do some digging and some research, but that would be very interesting to see, how many students are taking advantage of that rule and getting something that helps their career versus just filler material. If I had to just guess, based on what I've seen in my 12 years here, I would say maybe 80%, 75 to 80% of the students do get something that's related to their career, but there's a significant portion that don't. So yeah, I don't have any hard and fast stats on that, but the data is there.
Interesting. 80-20.
So when Florida was the first state in 83 to increase the requirement, add another 30 credit hours, college education was a lot less expensive than it is now. I think we can just take that as a given. Do you see the extra costs of the fifth year as a barrier to entry to the accounting profession?
I do. And it's not only the cost, it's also the opportunity cost. You're having to spend thousands of dollars on tuition and living expenses, and also you're giving up a year of salary. And so, especially at a time where we're struggling to attract minority students and first-generation students, I think most people, if you're honest, when you look at that, you would agree, hey, this is a pretty big barrier to getting into the profession. I don't see a way around that. Again, if there was some sort of agreement that we're going to require a master's degree, or, something that you could argue, hey, we are really improving this person's credentials and education, you might could justify the barrier, but I think we all have to get to a point where we agree it's a barrier.
But I feel like, there's some people that are on Twitter and they're saying, oh, this is like a badge of courage, right? This is to weed out the people that can't hack the extra schooling. But I think what's happening, a freshman or sophomore in college who's trying to get their ducks in order, they're like, I can't afford another year of school. And they're making decisions before they even give accounting a real consideration just because of the 150.
Yeah, I agree with that. And to me, the badge of honor is the CPA exam. It's a very difficult test. It's hard. You have to study. And to me, substantial equivalency should be based on that. If you pass the exam and you've got a bachelor's degree, that should be enough. Most of the people in our profession that are over 45 don't have 150, and a lot of those people are very successful and have done well. And so I don't buy the argument that we should base substantial equivalency on these extra hours that don't require certain coursework.
So NASBA, the National Association of State Boards of Accountancy, I imagine you're involved in that deeply as the director of a state board. Before we started recording, we were talking about how you're going to be going to you're coming to our state for an annual gathering. Is that right?
That's right. Next week in Tucson.
So is it all the state boards are getting together?
I might crash this.
So what it is, it's all the directors and certain key staff from the boards will gather for a 3-day meeting in Tucson. It's a good place to network and also hear from NASBA and the AICPA about current topics. I'm sure this will be a hot topic. If not on the agenda officially, it'll be a water cooler discussion for sure.
Yeah, well, I imagine it would be because NASBA, the board of NASBA, which is not every director, it's just some, is that right?
So NASBA has about, I think, 20 or 25 board members that they select for their board positions, and they meet, I think, once a quarter to kind of set policy and kind of govern the organization, which NASBA is a great organization. I've had really good experience with them in my 12 years. I've served on several committees. Currently on their UAA committee, which is, of course, a document that we try to keep everybody on not the same standards, but very similar. So that's an important document and committee. A lot of good people there. I don't know the reasoning for, and I was shocked when they said that all 20 or 25 directors voted unanimously to support it.
And that's what I was going to bring up. Yeah, is that the board voted unanimously last week or the week before to uphold the 150-hour requirement. And I thought that was interesting they did that because, it's because the state of Minnesota, there's a bill in the state legislature there to reduce the requirement from 150 to 120. Well, actually to create an alternative pathway. To allow for 120 with, I think, an extra year of experience in exchange, right? Swapping experience for the education. So they did this. They voted. What do you think about that? Would you have voted that way? What do you think about what Minnesota's pursuing?
Well, first, the board's vote, I was surprised. I wasn't surprised that they voted to support it. I was surprised it was unanimous. And to me, there's some sort of disconnect between NASBA and AICPA and the grassroots, if you will. Our board is very concerned about it. I talked to other states. Most of them feel, hey, we need to at least be talking about this, and to just shut it down and say, no, the 150 is the gold standard, the golden goose, so to speak, and we should leave it alone. I don't understand that, to be honest. The Minnesota bill, to me, is very good because it leaves a pathway for the colleges to keep, offering their MAC programs to students who want to go that route. And so you're not going to eliminate graduate schools for, 90% of the country, which would be a disaster. But you do offer a chance for these students that need to go to work, that are ready to go to work, that can't afford that extra year. They can get 2 years experience instead of, the one, but they don't have to have the extra 30 hours. And to me, that language in that bill is very good. I'm not crazy about the CPE side. I think there's a third pathway, but you get 120 hours 1 year, the 120 hours of CPE, just because you could do that in 3 weeks, right? You could get your CPE, and I don't think that's rigorous enough. But the first two options to me are really good. And if I was a legislator in Minnesota voting on that bill, I'd have to vote in favor as is, even with my concerns about the CPE.
I imagine the reason that bill is in the legislature is because the state board is hearing from firms in Minnesota that they're having trouble getting accounting students into their firms, and there aren't enough CPAs to go around. What are you hearing from firms in Arkansas when it comes to the talent crisis in accounting?
It's the same thing. We hear from firms that they can't find enough help. They're struggling. We have firms that they've got people that have passed the exam at 120, but they've got to, go to school at night to get their 150 to get licensed. And so, yeah, we're hearing that from firms. And I think that's what you saw in Minnesota is the boards and societies are getting pressure. NASBA and AICPA, for whatever reason, aren't really, maybe they don't hear the same comments. I don't know, but there's a disconnect there. And so you kind of see this wild sheep or black sheep, I guess, going out on its own. And we'll see if it creates any momentum. I will say our state is looking into it. We haven't filed any bills or taken any official action on this issue, but we're very interested in what's going on in Minnesota. I know South Carolina has a similar situation going on with their state society, and so we're very interested to see where this or how this plays out.
Jimmy, can you speak to the autonomy that the state societies have, and the states in fact have versus the bigger national organizations? Is it kind of an unwritten, like, you better play by the rules, or is it, do you truly have the power to just change it on your own?
Well, I'll start with state boards. That they definitely have, we have our state statutes. And so we, I guess, somewhat control that. Of course, we have to get it through the legislature, and that creates challenges. But as far as us, needing the CPA or NASBA to approve anything, we don't have to have their blessing. Obviously, we'd like to have that. That helps the process when we get through that. From that society perspective, for years, I think that state societies have been kind of lockstep with AICPA, and you very rarely saw much challenge of ideas or, any kind of disagreements. But I think we may be seeing a tide turn on that because of this issue right now. That's a very good question.
Firms that are able to retain, recruit, what are they doing that firms that are struggling aren't doing?
Well, I'm not boots on the ground on that, so to speak, but just from what I hear, it's work-life balance. Starting salaries are an issue. I did some calculations a few weeks ago. I started with Arthur Andersen back in 2001, and I took my base salary and adjusted it for inflation. And from what I hear, the starting salaries are out there now. We haven't even kept up with inflation from when I started back 22 years ago. And so that's an issue, work-life balance. We've got a generation of students that don't want to be in the office 70, 80 hours a week, and their actions speak to that, loudly. And so firms have got to get creative in work-life balance, salary arrangements. You see a lot about unlimited PTO, which is, to me, is problematic because we all know the pressures of not being there and having projects to do. And to me, it's just a license not to have people be in the office all the time. I think it actually does the opposite. But I think we're going to have to see firms get creative in what they're doing to attracting is one thing, but retaining is a whole different animal. How do you get those folks to stay? And money and time is really the two big issues. And how do you balance that out and give folks a reason to want to be there long term?
So that's all the time we have. We talked to Jimmy a bit longer than that, but I think you got the best bits there. Really great to to talk to somebody who's leading a state board of accountancy and he hears the issues. He's listening to the members. Omachi says, can't lawyers fulfill their legal studies in a law office or judge's chamber in California? Wouldn't something like that work in accounting? I'm not sure, actually. I have no idea. I do think that the comparison of accounting to law or medicine is false, that we shouldn't be doing that to justify the 5th year, because lawyers go to law school, and the law school results in a law degree, and they require that to be lawyers. And same thing, medical doctors have to go to medical school. We don't have accounting school. That's not what this 5th year is. It can be anything. And so, it doesn't add value the same way. It's not equivalent, right? It's kind of like a pathetic attempt, to do what that was. And I don't know, the legal profession, the medical profession, they're having their own issues with recruiting. So I don't think we want to be copying them or making it even harder. I wanted to show everybody this poll that Mike Sylvester CPA did on Twitter. He said last week, should 150 college credits be required or 120 to be a CPA? Personally, I think we should change to 120 hours tomorrow. And so you could choose 150, 120, or just see the results. Only 25% of the 562 respondents chose 150. It's only a quarter of tax Twitter.
To get 560 votes, this is a Twitter poll?
Yeah, Twitter poll.
That's pretty good. That's very, very good for a Twitter poll.
Yeah, it's good, right? And so, 150 got 25%. 120, to go immediately to 120, got 60%. And then there were 15% that didn't give an answer, just wanted to see the results. So, if the state leaders and the AICP and NASBA are listening to the members, I think majority, well, who knows, right? But at least a solid majority of those online are in favor of going back to 120 immediately. So I don't think this would be actually that difficult to do, right? There's a lot of support for this in the community. And the argument is, it would take so long to change the law in all the different states. I don't think it would take that long. I think maybe a few years it could be done if we had the willpower to do it from a national level and to get all those hundreds of people working at NASBA and the AICPA, moving on this, right? What else are we paying them to do if it's not to advocate on behalf of the profession and do big things like this? So, I don't know. This is do your job, right? Don't say, it's too difficult as your excuse. There you go. David, do you want to share anything else before we go?
I think
a few more minutes.
So the CPA Practice Advisor, they do their annual Thought Leaders Symposium, if that's the right word they use for it. And they published a whole post about it, right? And in the title of the post is Accounting Thought Leaders Discuss Future of the Profession, Advisory Services, and Tax. And Vimal noticed, and a bunch of others, if you follow through this thread, that it's just a bunch of white people. And they talked about diversity in accounting. And the other thing is somebody else called out on the article itself on CPA Practice Advisors post is what's the point of this article? It's just like a photo album. They list who's there. There's a bunch of photos. They have bullets of what they talked about, but there's actually no meat and potatoes here of what they discussed.
What did they actually talk about?
Yeah.
What conclusions did they come to?
And so I was searching Twitter because I swear to God, this has been brought up previous years. They put out the photo and then people start being like, where's it's just
yeah.
Didn't you play that thing about the construction industry about it's just the same?
It's the same people in the room
over and over
every year, over and over. It's the lack of diversity of thought that's the real problem.
But there was someone who said the nice thing is the 40 under 40 is very diverse now.
Yeah.
So hopefully,
But isn't that what this thing is for?
Well, this is not the 40 or this is just the thought leaders, which is different than 40 or 40.
Okay.
They could have brought in two other white male thought leaders if they'd like from the Cloud Accounting podcast. Oh boy.
Well, I don't apply for these things anymore.
No.
I did it 2 years and I stopped going because it's a bunch of people in a room and nobody's really saying anything that's meaningful. It's all talking just to talk, which I feel like is a lot of what the thought leaders in our profession do. They get up and they give a presentation because that's what they're supposed to do, but they're not actually saying anything meaningful.
Well, I think a lot of these things, even some of these events I've attended at at the AICPA itself. These things are set up to get vendors to spend money.
Yeah. And take photos. Well, at least they posted the photo album this year. David, that's all the time we have for this week. Where can people find you online if they want to track you down and tell you what they think?
I'm on all the socials at David Leary.
Yeah. And I am at Blake T. Oliver. Follow us on YouTube. Subscribe to the Cloud Accounting Podcast and get notified when we go live. And you can join us and you can let us know what you think in the chat. It's so great to see all of you and have all of you join us, especially on a Friday afternoon as we record a little later than usual.
And
Friday
next
night
Friday,
for some of you.
we have normal schedules. Like we'll be live.
Yes.
At our normal Friday time. We're not traveling. We don't have any craziness going on, right?
That's right. And we have Dr. Josh McGowan. I believe he's from Troy University. He's going to be joining us to talk about the future of the profession. And he's very bullish. He's an accounting educator. I want to hear everything that's going on in the cutting edge of education in accounting. And, he's a young guy. Let's get his perspective. So tune in for that. Again, subscribe to us on YouTube. Trinity says, have a great weekend. Thank you, Trinity. I will. I'm going to go for a hike. We're going to have some good weather here in Scottsdale. So I hope it warms up for everybody else. I know it's been kind of crazy with the snowstorms.
And be safe out there.
Be safe. All right, David.
Bye,
I'll
everybody.
see you next week. Bye.